Controlling cryptocurrencies have been likened to containing water in your hands. It's impossible. We've seen jurisdictions like South Korea and China come down hard on crypto for the demand to spring up elsewhere. Canada and Japan are two countries who have proven to be favorable towards blockchain and are becoming crypto gold mines. The world of blockchain is Internet 1992. The Amazons, Googles, and Facebooks of the space are starting to become apparent. There is one company in particular that is strategically positioned as the most diversified blockchain play in the world, with strongholds in Japan and Canada. Do not miss out on the early positioning in crypto. To learn more about how to profitably ride this remarkable trend, visit crushthestreet.com/blockchain. Hello everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and I'm joined today with a returning guest. Haven't had Phillip Kennedy on the line for some time now. I was on his show a week or two ago, and I had a great time. And I'm having him here at Crush the Street. He's very well researched. He knows his stuff. He's with Kennedy Financial. He does a great show on YouTube along with his brother. The YouTube channel is you can search Phillip Kennedy. And he does a great job of covering the latest news, commentary, and interviewing great guests. So Phillip Kennedy, thanks for coming on Crush the Street with me today.
Thanks so much for having me back on, Kenneth.
Phil, the latest news going across all the headlines right now is Rex Tillerson fired from the Trump White House as Secretary of State. Seemingly the chaos president, considering we're watching all of the insiders and people in the Trump White House fall like flies, to the delight of the liberal media, I would say. But I would also add that the market seems to be Trump agnostic and actually perceivably very bullish about Trump going back to when he was elected. What a disconnect. What's going on here? Just want to kind of get your insight on what is happening.
Well, I'll tell you first thing, he really sends a message when he fires someone, doing it on Twitter this time. Instead of, notifying, like with Comey, notifying him through the media while he was on the West Coast. So, if you were a candidate who was considering a job at the White House, I'd be somewhat apprehensive myself. I don't know about you, Kenneth, but I mean, you've seen what has happened before. And I remember thinking this back when I used to watch The Apprentice, and Trump had a woman, and her name escapes me at the moment, but he would refer to her as his right-hand man, and, whatever she said was like gold, and she would give him feedback on how the candidates performed on The Apprentice, and lo and behold, years later, she was fired too. So it seems like in Trump's eyes, your status can change overnight, and it looks like that appears to be the case with Rex Tillerson. But we had heard problems in the past, that maybe he allegedly had called Trump a name behind closed doors. And it seems like in this environment, a lot of folks are susceptible to stress. It sounds like the White House is a very stressful place to be. So we'll see how Rex Tillerson's successor does, Mike Pompeo. But I know me personally, I would not be submitting an application to work there. It just sounds like it's too much of a revolving door. Zero Hedge reporting like every 17 days now, new on average, a Trump assistant is escorted out or resigns or is fired. So it's interesting, though, that the markets, as you alluded to, don't appear to be reacting to any of this.
Yeah, I saw a headline this morning. It said, Main Street is on fire again. Small business confidence surges to highest since 1983. And you would think the markets would be the propaganda, the last bit of propaganda the media would need to really trash Trump. Because at this point, when it's all said and done, the financial propaganda looks good.
Yeah, it appears to. I mean, here we are looking at the Dow. It's basically even. You would think this kind of news would have sent it down like 500 to 1,500 points like did several weeks ago. I guess it was back on February 7th. We finally saw the bottom. There was that one day we lost like 1,500 points in an hour or so. But for me, it appears that the general trajectory since late January is still down. Maybe it won't happen as dramatically as some of us in the alternative financial media have been predicting and forecasting for quite some time. Maybe it will be a controlled demolition. But the fact is, we're starting to see a trend line here from 26,500 peak on the Dow. Now we're down to 25,000. I've been proven wrong so many times, especially through this quote Trump rally. We traded even from 2014 through the president's election, and then all of a sudden, out of nowhere, the market goes up another 45, 50%. But, to me, I'm still standing by my principles. I think all of that was phony. The Trump bump, the Trump rally, who knows what created it? Who knows what tools are at the president's disposal? Once Trump became president-elect and then officially the president, maybe that plunge protection team was working overtime, right? It is called the President's Working Group on Financial Markets. So, I just think that none of this is sustainable. And eventually, I think as we cruise through the remainder of Trump's presidency, bad news will be bad news. Bad news won't actually be good news.
Yeah, isn't that such a dichotomy? I remember just looking at when we would get the quote-unquote good news, and this happened quite a bit during the Obama administration when they really weren't talking about tightening, but just maybe alluding to it. But when we would get good news, that would signal a potential future of monetary tightening, which would actually make the markets go down. So good news would come out and markets would go down some. And I thought that was just the oddest thing and such a dichotomy that we have here in the markets, which just goes to show how distorted they really are.
Agreed. Yeah.
Phillip,
we've been...
Yeah, no, I was just going to add and get your thoughts with the trade wars here. Trump announced the steel and aluminum tariffs. And I really spent a lot of time thinking about it because from a traditional libertarian Austrian economics perspective, free trade is the best way to go. And tariffs are bad for the economy. But it's a chess game that I think he might be playing here, trying to get some concessions, trying to work the markets here. Is there some light at the end of this tunnel, or is that light that we're seeing a big train that's about to run us over?
Well, you know me, I'm a bit biased in this regard. I think it's a train, and we're about to be run over. One of my favorite pastimes is to get on Twitter and tweet at Paul Krugman. And Paul has yet to respond, but his followers do. And, Paul will be critical about something like the tariffs and, gosh, if a president was going to deploy tariffs, this is the absolute wrong way. And I say something, as a rebuttal, like, agreed, Paul, tariffs are terrible, and so is quantitative easing and artificially low interest rates. And immediately his followers start to come after me. Well, tariffs are wrong the way the president's employing them, but quantitative easing was absolutely necessary. And so were, these 0% interest rates, and, they'll eventually get raised again, and the Fed will unwind its balance sheet. And it's just funny to see the hypocrisy of those who still believe in Keynesian economics and that it works and that government should be involved in the economy and manipulate free market prices. So I think, the president's probably made a grave error here. We'll have to wait and see to find out, but who knows why any of these decisions are really made. I heard the suggestion that maybe this is a precursor to war. A lot of steel is necessary for building up the military. God forbid we're heading to a World War III, but there may be ulterior motives here. And you also can't discount the fact that the president, even when he was a real estate developer, he would make absolutely asinine recommendations, or through negotiations, he would, make one set of asinine demands all along, knowing that, okay, well, they're not ever going to agree to that, but, let's set the bar high, right?
Mm.
So who knows? He might be doing something similar here. I wouldn't put it past him, but I just, I've never really, I've always been true to my Austrian economic beliefs, and I think any manipulation or distortion in the market in the long run is going to have net negative effects at a minimum, if not disastrous ones.
Right. Yeah, and I agree with you on that. And I felt like the Brexit decision was a sound Austrian towards an Austrian economics decision for, Great Britain. And I read a headline this morning that the London housing market has fallen the most we've seen since 2009, and they're blaming it on Brexit. And it's kind of interesting because it's almost like in certain ways the traditional markets are dependent on these Keynesian bubble economies to a certain degree. And it's to what degree do you play the game, or do you stay true to more fundamental type principles? And I just find myself having a hard time fully wrapping my mind around that, because sure, there's the fundamentals, but then you have the masses going in a certain direction, and ultimately fundamentals prevail, but it might take years and years and years for that to play out. And what do you do in the meantime? That's the question.
Right. Yeah. And it's really hard for the general public to connect the dots and see, hey, it was from this decision 6, 7, 8, 9 years ago that we're suffering the consequences today. So, you would have probably a lot of Obama supporters who, if the economy suddenly collapses, if the stock market collapses on Trump's watch, they would say, oh, well, everything was fine under Obama, and now look what happens. We have this, reality star Republican, and everything falls apart, and now we just, need to go back to what worked before. But I say that's akin to buying a used car with, say, 300,000 miles. You drive it down the road back to your place, and then you're suddenly pulling off to the side of the road because it's overheating and smoking. Well, is that your fault? No, it's the guy who didn't take care of it before. But unfortunately, a lot of voters don't see things that way. Right. But I'm glad you brought up Brexit, because someone else brought that up in Twitter. And it's funny to see people who can't stand the president on one hand, and then they criticize things like Brexit and Trump's election on the other. And I'm kind of left scratching my head, maybe your audience is too, because don't they see that one is a consequence of the other? Don't they see that voters in states like Pennsylvania and Wisconsin were just fed up, and they were looking for that human hand grenade, as Michael Moore called him, and they pulled the lever for Donald Trump. So I think the average American feels it. They know intuitively that these Keynesian policies don't work, and their standard of living and quality of life has gone down over the last decade. And what did they do? They went out in droves, and certainly in the states that mattered in terms of the Electoral College, and took a chance on someone different. But it's whether you hold a master's degree in political science, or whether you're a coal miner in West Virginia, you understand intuitively that if life is going better for you or not. And average Americans, Brits, they both realized, hey, these systems aren't working for us. And so they took a chance on something different.
It's that deferred gratification on a very macro level. It's hard for people to really opt for that. Savings for the long term, maybe higher interest rates for the long term, because a lot of these things people don't directly feel, especially a lot of people, practically 50% of the U.S. is paying a net zero in taxes. Right. So there's not a lot of consequence that people directly feel from just instant gratification. And I think that's the problem with the current system we have now. And, unfortunately, it creates that everything bubble, and we're continuing to see that inflate here. So having said that, Philip, let's chat about gold. Gold has seemingly been slightly boring since December, January earlier this year, where we saw it spike up pretty dramatically, but we're still over $1,300, and that's been shown to be pretty stable here, and we're getting a lot of confidence that we're over 1,300. Maybe the $1,200 range is behind us now. What are your thoughts on gold here?
Well, I tell you, first and foremost, the last 7 years have definitely been a financial education for me. Never in my wildest dreams, if you had asked me in, I don't know, spring of 2011, hey, the government is going to have endless deficits, Donald Trump's going to be the future president. We'll have artificially low interest rates in perpetuity, and the Fed is going to buy up toxic assets through quantitative easing, and the price of gold and silver are going to go down. Could anyone have ever imagined that? And so it was really through that process that I started to educate myself on really what is the gold and silver market. And it's a paper market. And you find out that on the LBMA, that their method of accounting for who owns what is simply by taking a pallet jack and moving gold from left to right from some line down the middle of a warehouse, right? So for a guy who studied accounting, and my background is, forensic accounting, I'm a CPA, this is just nonsense to me. I'm like, when is this finally going to blow up? When is the world going to realize that there is not enough physical to back up these contracts? And then you extrapolate that to the gold and silver mining stocks and just how suppressed they've been. We started to finally see some movement in 2016. I think we were all starting to get excited, but then nothing, I think the only good news is that we have found the bottom. I can't imagine it going any lower. It seems like the market wants 4-digit gold. It's not going to go below 1,000. Same for silver. We're not going to see silver below the teens. So that's the good news. I think if you liked gold and silver in 2011, you should love it now. But it's really been hard for me personally to trust these markets anymore. And I think that's one thing that excites me about the crypto markets is, and I know some of your audience is going to cringe when I say this, and I've had people on my show where I say the same thing. I think that the crypto markets have something the gold and silver markets don't have, and that's trust.
That's interesting. And I'll just throw this out there because I know some people might be thinking it. The crypto markets are still very new. Have the big money central bankers, have they not had time yet to attempt to control the crypto markets? Is that coming, in your opinion?
I think they'll try, and I think they'll fail. I think they'll get away with it in the short run, and I know many people have made the point. They put charts up on Twitter, and they say, hey, look, here's where the CME futures started trading for Bitcoin, and here's the trend line down, right? Is that a coincidence? Well, maybe not. Maybe in the short run, they have had some luck manipulating the price of Bitcoin. I don't know. I don't really know who owns which Bitcoin and what wallets they have it, but I think that in the long run, that's going to backfire because eventually Bitcoin ends up in strong hands, people who believe in the technology, people who understand its inherent value. So I think that any attempts to suppress the price in the long run will eventually fail. We got news recently that the Mt. Gox trustee sold like $400 million worth of Bitcoin since September, and he has more to sell. So, these are artificial sales coming onto the market. Anything maybe owned, if the Japanese central bank owns Bitcoin, they might try to push the price down. But I think that savvy people are going to figure this out in the long run. I mean, if you just look at the Mt. Gox hack itself, some brilliant person or organization put together a chart showing the transactions from one wallet to the next of all the coins, and they could see where they were going, and they couldn't see who held them, but they were able to track them through a decentralized ledger, which is trustless and immutable. And so this is the beauty of cryptocurrency, and I get that it's new, and for most people, they're never going to like it. There are people who have never bought a DVD because they like their VHS tapes, and that's fine. But I think that this disruptive technology is bringing something to the world that we never had before. I mean,
Right.
even a couple decades ago, we weren't able to shop online, and now we have Amazon talking about delivering things via drone. And there's certain communities where Amazon's going to deliver whole foods to your doorstep in under 2 hours. So, the argument that, hey, this is new, and how do we know if we can, really depend on it as a financial asset? I think Bitcoin is continuing to prove itself. And even if the powers that be are successful in manipulating the price down, there are still thousands of other cryptocurrencies and at least a dozen others that I think are very reputable. So they're going to fail, and that's my opinion with regard to cryptocurrency.
Yeah, that's interesting. So let's talk a little bit about the current action and the price. I've been doing a lot of thinking about it, and one of the things that you pointed out when I was on your show was the Bitcoin trending on Google and how it peaked in December, January, and it's basically followed with the price, and we're losing a lot of mainstream enthusiasm. And it's correlated largely with the price. Bitcoin right now is around $9,000. And I'd like to get your thoughts on it. I saw a headline today, Goldman Sachs, Bitcoin, quote unquote, has potential to drop below February low of 5,922. And I would take that coming from Goldman Sachs with a grain of salt. But a lot of people are speculating what will happen in crypto, and I'm open to the potential that bear markets can get ugly. What are your thoughts here?
Well, I agree that bear markets definitely can get ugly, and who knows where the bottom is. I honestly thought that 10,000 would hold up the first time. But I think one of the things that gives me a little more confidence these days is using a ratio called the Mayer multiple after Trace Mayer. And anybody who would like to follow this multiple should go on Twitter at TIP Mayer multiple and follow that Twitter handle. It gets updated by bots, I guess, every 3 to 6 hours, something like that. And it's great because it's a reminder that back in December, the Mayer multiple was like over 3 heading to 4, which was pretty outrageous. And that's not the highest it's ever been. I think it was higher in 2011 and late 2013. But even in December, I remember the date specifically because it's a day that will live in infamy, and it's also my birthday, December 7th. Bitcoin suddenly shot up from like 14 or 15,000 all the way up to almost 20. So it was going up like $1,000 every 10 minutes or something in the morning. And I was just staring at my screen like, this is outrageous. And I immediately got on Facebook and I said, hey, I forbid anyone from buying Bitcoin today. And of course, I got some trolls and things like that. But the thing is I think anybody who's been following these markets for a while knew that that was unsustainable. And now that we're seeing a Mayer multiple down near 1, if you go to Google Trends and look up buy Bitcoin, you're seeing, the like 52-week lows in terms of searches for buying Bitcoin. And me personally, I'm a financial counselor. Back in November and December, I was getting calls, text messages, and emails, people asking, hey, what's going on with Bitcoin? How do I get some? How do I sign up for Coinbase? How do I get a Ledger wallet? And now nothing. It's crickets. So that's a good sign for me. Nobody's reaching out to me and saying, hey, how do I do this? And I think those days will happen again. And I'll be glad to come back on Crush the Street and other shows and say, hey, it's ticked up a notch. People are interested again. People are wanting to buy for the first time. And what I usually tell those people is wait. Don't buy right now, because the fact that you're calling me about this thing and I've received a dozen calls this week, is indicative of the fact that it's overpriced. So these are just some tools that people can use. If you're really advanced, I would encourage people to sign up for Coinigy and get a Coinigy account. At some point, when you have too many coins and you're on too many exchanges and you have too many wallets, no human's going to be able to keep track of this stuff. And that'll be an education in and of itself. Just following these charts, developing some trend lines, doing your own little forecast. Don't trust the news when it comes to crypto. I think there's just so much fear, uncertainty, and doubt out there. The worst thing you can do is get on CoinDesk and read an article and be like, oh, that's bearish for Bitcoin. I need to sell it all. This is still a nascent market. I had a guest on my show who's a Bitcoin millionaire, retired at the age of 34, and I asked him, what inning do you think we're in if this is a ball game? And he's like, Phil, I don't even think we're in the second inning yet. So I would tend to agree with him. Most people, even if they've heard of Bitcoin, they don't own any, and they wouldn't know how to get their hands on it if they even tried. So that's kind of where things stand on the cryptocurrency markets as we speak here in March of 2018. And one more thing, Kenneth, I was looking up on probably my second favorite crypto website is coinmarketcap.com. And if you go to the market dominance and you just see those fluctuations, Bitcoin has been through this before. Sure, it got pounded. I think it was down like 70% since its December highs. But to realize that this is not unprecedented, it's gone through these cycles multiple times. I think in terms of market dominance, Bitcoin's going to be back over 50% in this cycle. Now, what's that going to be? 50% of $800 billion or 50% of $200 billion? Who knows? Maybe Bitcoin's market cap could end up lower. But the bottom line for me is that cryptocurrency is not going away. And this is the most evolutionary financial instrument that's come in our lifetimes.
Yeah, you're absolutely right. And the only thing I would say is we had people calling it a bubble from the time, at every moment of Bitcoin existence. Everyone, or a lot of people, have questioned the price. There's never been a time in Bitcoin's history where people didn't go, it's expensive at $100, $30, $1,000. Man, when it got to $1,000, everyone was like, this is insane. And now, sure enough, that was January of 2017. And here we are 9x later with it going up 20x. So, yeah, there's a lot of, I guess, shock on both sides. People who didn't believe in it at all, and then people who did believe in it, where Bitcoin exceeded their expectations largely in 2017. At least it did for me. And one thing I was saying was Bitcoin in 2017 will become an asset class. And I think it did that, and I think it's going to continue to solidify its state as an asset class going forward in 2018 and for the foreseeable future here. But having said that, Phillip, I'd love to end this with just some practical advice from you to the audience on how to approach these markets, whether it's the general stock market, precious metals, cryptocurrency. So I know it's such a tough question, but what do you do? How do you approach these markets with just the massive distortions that exist, and doing so in a way that allows you to sleep at night and enjoy yourself?
Well, I know we've talked about a lot of fun things through the interview, but I always tell people that I'm counseling, look, in order to get to the fun things, you have to get through the basic things that might not be so fun. So that includes setting up a monthly budget, especially if you're married with kids. From that point, once you've got all your debts paid off, other than the house, I'd say, make sure you have 3 to 6 months of savings in cash. And then after that, I'd prefer to see you maybe have 3 to 6 months in physical gold and silver that you keep in a safe that you hold and control. And then after that, make sure you have life insurance, disability insurance. You're putting a little bit away in a 401k, especially if there's a match, right? Because I can guarantee that if you're getting a 3 to 5% match at work, that's 100% money on you every week, and then you're not going to get that anywhere else. Beyond that, I don't see the point, because this is we live in an environment where government has kind of put its thumb on the scale and created these qualified retirement plans. So for me, I think a lot of people have to kind of, once they've taken care of all those things, then they need to pursue non-traditional things, thinking about gold and silver mining stocks, cryptocurrency, and things like that, because we're not going to be able to retire the way our grandparents did on a pension. So those are just some of the things we talk about each week on Kennedy Financial, and We're still trying to get over 1,000 subscribers. It has been pretty rough, but I still say, we're putting out some of the best financial media for a YouTube channel with less than 1,000 subscribers. So if people would like to help us out and subscribe to our channel, we would greatly appreciate it.
Absolutely. We'll have the links to your stuff in the description area. Phillip, thanks for coming on Crush the Street. And if you have any thoughts or you want to say anything else about what people will get if they visit Kennedy Financial, please share that now.
Well, they're just going to get the unvarnished truth from my brother and I. We work as accountants, so we look at things through the lens of accounting. Accounting doesn't lie. Debits and credits don't lie. So they're going to get a weekly interview with someone like Kenneth. They're also going to get, a 10-minute crypto corner. And I also do a weekly lunch interview with somebody else. So we're putting out material almost every day now. And it's unvarnished truth. We are not, con artists. So some of these people I talk about each week are, hey, I can tell you where the crypto market's going to be in a week or a month. We don't do silly things like that. We just kind of take basic financial principles and talk about them daily, Monday through Friday.
I appreciate your time, Phillip. Thanks for coming on Crush the Street.
All right. Thanks, Kenneth.